Welcome to video 3 of our opening range breakout onboarding series. In this video, we're going to dive deeper into the two different strategies, the breakout strategy and the pullback strategy. Both of these are designed to help you find trades throughout the day, breakout a little bit more momentum based, pullback a little bit more patient oriented. By the end of this video, you'll know the nuances between the two strategies to pick and choose based on not only which works for your trading style, but also the time of day that it is. Now, let's start with first understanding how this opening range breakout setup works. And for all of that, we need to know what the initial starting point is, where all of this starts when price either breaks above or below one of our opening range breakouts. Either we break above that morning opening range breakout high, triggering a long side breakout, or we trigger below the morning opening range low, triggering a short side breakout. But in either case, that is the initial trigger node. That's what gets this entire ball moving. Now, when we have the actual breakout, that's what we call the ORB breakout setup. For most traders, this requires you to take immediate action. When the breakout occurs, you need to be sitting, waiting, and watching, ready to enter at the breakout level. Here's an example of what it looks like and why sometimes you need to be on top of it. You can see here that price broke above the 30-minute high, and never did you get an opportunity to enter at a price better than the opening range breakout high. You simply had to enter with the buy stop order and ride the momentum up. Very much a momentum-based trade after we had the breakout. Now, a few times you'll get pullbacks just back to the actual breakout level, and so that might be a smaller pullback you look at, but the deeper pullbacks are oftentimes missed with the breakout setup, given that the momentum is all happening in one direction. So that's one set or one pathway that you could take with the strategy. The other pathway that you can take is the ORB pullback, and this usually requires a little bit more patience. Here's an example of the pullback setup, and I'm going to walk through it in a little bit slower detail. You have the initial short side breakout right here. That happens when price breaks below that morning opening range low. Now, when that happens, this is where the short side breakout gets triggered, and this is our target down here, and this is that half range target. We've talked about this half range mark, and that's where the half range, this would be the stop, this would have been the target. This is that 1-to-1 risk to reward trade. Now, instead of making a move to the target, you'll see price here pulled back to that pullback level. Remember, the pullback level is exactly halfway between the opening range high and the opening range low. And this pullback level is where price pulled back to. Now that is what we call our pullback entry, when price pulls back to that overall zone. Where in this zone you want to enter is entirely up to you. But by entering at this pullback level, here's what you've been able to do. Your stop is now outside of the high, where traditionally with a breakout, you would have to have a risk of 2. Now you've been able to cut that in half by now having a risk of 1. That simple act of having a better entry gives you a lot of flexibility. You can now have your first target at 1, which now gives you a 1-to-1 risk to reward ratio, a little bit more flexibility. You could also go for a T2, which is the original target, which now gives you a 1-to-2 risk to reward ratio, skewing that risk to reward in your side. This is that pullback T1 that we originally talked about. It's the original target for the pullback, but skewed based off of wherever you actually got the entry. Now let's dive deeper into the breakout strategy first. This is the classic strategy with the opening range where you're looking for momentum to continue beyond the opening range. So if you take a look at this screenshot, we have the breakout. We're looking for that momentum to continue, and the only kind of real pullback that you might be looking at is a retest of the actual opening range level. That's the classic opening range breakout. You're playing the momentum, you're placing your trades between that 9:30 to 10 based off of the 5, 15, and 30-minute breakouts, and you're letting the trade essentially work itself out. Now, there's pros and cons with this strategy. The pro is, again, very clear objective. You're looking to ride this momentum. We have the entry, we have the stop, we have the target. In fact, if I pull in our live scanner and we look at, say, a breakout trade right now, let's use booking.com, for example. and we were to open this, we very clearly can see the entry price, the stop price, and the target price for this particular strategy, which in this case is a risk one to make one. Now, booking's a little bit more expensive, but let's come into Amazon. Now, I really like this Amazon example because this is one that I would be a little bit more cautious of, given that risk two to make one in spite of being a breakout. That's where I look for a negative P&L if we have to risk two. So clear objective entry signals and a clear risk to reward ratio. Make sure to pay attention to those. Now, with the classic breakout, you're looking to capture the full momentum, and it works best in trending markets, which these technical filters, if we come back into the top, helps you find those trending markets very easily, especially the stacked EMAs and the momentum cross in recent history, where this, along with looking at, say, all trades, is a really great place to find where you've had some recent momentum bursts. For example, today inside of Altria Group. Now, there's cons to this strategy as well. The con is usually, like I showed you, a lot of these trades for the higher win rates require you to risk two to make one. So you need to be either a little bit more patient with waiting for the P&L to be negative, so some sort of a pullback, have either a tighter stop or be comfortable with this wider stop, especially if that opening range is large. You can get whipsawed, especially if it's choppy markets, and you do have lower win rates with the breakout. There's less momentum, especially when you're in a range-bound market like the S&P has been in. If we were to say come inside of our reports feature and you take a look at how these strategies have performed in the past 90 days, the S&P has been in a whole lot of chop. You'll see the breakout and the breakout on the 5 and the 15 minute are the two negative strategies in terms of the actual P&L, which gives you an idea of how these strategies perform when you're inside of a choppy market. So the breakout strategy has a time and place to be using it. Next up, we have the pullback strategy. Now, the pullback strategy is a variation. It's still betting that the breakout has legs, but you're waiting for a better entry price. And the beauty, at least that I think of the pullback setup, is that it can occur throughout the course of the trading day. This is not just a morning-based setup. So suddenly, this live scanner you can now use throughout the day to find setups in which not only are you getting pullbacks, are you getting better setup opportunities where you're risking one to make two, and you can find some of these entries where you're really being able to skew that risk to reward in your favor. So let's look at an example here. We had the breakout. After the breakout, we had a pullback to the pullback level. That's where we're looking at an entry. That's where the live scanner is looking at an entry as well, at the pullback area or a little bit better than that entry price. The one-to-one risk to reward on this trade is a stop outside of our opening range and a target at the other side of the opening range. This means you can start to suddenly play inside of the ORB field instead of needing to wait for an extrapolated target. That's another luxury that you have. So with this pullback entry, the first target is that same opening range high, which is where we used our breakout to actually give us this pullback in the first place. The actual breakout entry is now where we're taking off our first target. Your stop is outside of the opening range low in this case, since we're looking for a long side breakout. Now your second target on this is the original first target that you had for the breakout. So this is the half range first target. And this is where now, if you think about it, you're going for a reward of 2 while still risking just 1. So now you suddenly skewed this in your favor. And for some trades, like this one, you have runners. And those runners are ones in which you're risking 1 to try and make 3. And these, while rare, are some really nice home run trades. Now, the pullback strategy, while rosy as it sounds, certainly has its pros. And I think those are obvious. You get a better entry price, and as a result, a lot of times better risk to reward ratios. You're also able to have a tighter stop, and it allows you to use the scanner throughout the day. But it does have its own set of drawbacks. You'll miss some setups, and in fact, you'll miss a lot of setups that never pull back, the momentum-based breakouts that are meant to just run. A lot of times, these pullbacks feels uncomfortable, especially if the entry is closer towards the stop. You should be a little bit more excited about that, given that you've been able to reduce your stop substantially, but this will feel uncomfortable. That's where I think having the backtest stats, knowing that the strategy has a 70% win rate, it's a bet worth taking in a series of bets. That's how I think about it. I think is something that takes a little bit of getting used to. And finally, you'll find in a lot of cases that this pullback in a lot of times has lower win rates, especially something closer to that 45%, whereas the breakout might be closer to a 65%. That's because we're looking at an entry as price is drifting in, say, a long case towards a stop, and you're looking to buy that entry, betting that price is going to stop and reverse. The way you can also side this a little bit more in your favor is using some technical analysis indicators along with Fibonacci and price levels for confluences of this pullback entry level to increase your likelihood of finding some of these pullback setups where you have a home run trade idea. All right, in the next video, we're going to go through the backtester and reports functionality in more detail now that you've understood these setups so you can start to dig into the reports and be better prepared every single weekend.